to be a solid report. Okay, so especially such a volatile day, such as a week, sorry, such as this one, which we had Bank of England, we had a Fed, we have earnings. We had a very long and volatile week, so that's why NFP is in focus, expected to provide volatility into the market as usual. And just briefly saying, because we're just 7 minutes away, just to inform you guys that is expected to be, as I mentioned, okay, as I mentioned, a very solid report, a very strong report. Okay, who knows whether you're gonna miss the expectations or not, but this is what expected. So for example, Reuters has forecasted 465,000 jobs for October. There are other websites and analysts that they have forecasted less, but yeah, it's expected to beat expectations. For example, the FX Street, for example, is expecting about. Let me just be precise with you. The FX Street analysts expect around, come on, I thought it was 450, but let's see whether is this still the case. 425, so they have detected 425,000 expected according to FX Street. So let's see what could happen. So until we got the data out, I can see your questions. Yes, dollar is strong after Bank of England, after Fed. So let me share my screen with you guys so you can follow me. Dollar is strong, remains strong, even though we have seen a bit of a slip just now, just 25 minutes ago, due to the announcement, due to the anticipation in few seconds of the NFP. But okay, let's see. Here we are. Let me just remove my caption. I believe you can hear me loud and clear. Right? Yeah, I think you do. Perfect. Yes, you do. So as I was saying, yes, dollar is strong. Of course, if the data in 5 minutes meets expectations, we might see a bit of a reversal. Okay, but overall, especially after the Fed, the dollar remains on bid. Okay, remains on bid, driven by yields, driven by stocks, the equity markets in general. You can see that it's already back to September, October's highs, right? Retesting after this big boost that we got yesterday. So it needs to be a very disappointing, a big miss today in order this boost that was seen in November to reverse. Okay, so 4 minutes away. So let me summarize a bit what we have. We had a very strong dollar for 3 days in a row. We had also some bid. We saw some bid the last 2 days on yen as well. However, all the other major indices such as euro, pound, Aussie, Kiwi, Swiss have all declined, weakened against the US dollar. So let me just, okay, wait. So strong dollar before the, so far, slightly a bit of a firmer yen. All the other major currencies are under pressure after Bank of England and Fed. While on the equity market, guys, it's just a briefing, okay? Until we got the data out, just to see what happened with the NFP. So yeah, in regards to the stock markets, where is my stocks? Oops. Sorry, my mistake. That's my bad. So we have DAX over here, spiking to record highs yesterday. The same stands for S&P 500, Dow Jones as well, boosted higher, NASDAQ as well. So you can see at record highs for 16,444, record highs for all the major indices yesterday, and that came after the due to the better than expected earning releases. So we had Qualcomm, we had Expedia, we had News Corp, we had we have we had Qualcomm yesterday, Expedia today, and yesterday again with News Corp as well. Better than expected results. So in general, the earnings season is supporting the US equities, but also because the yields, even in Europe, yield or the band slipped lower, that further supported the stocks. So we have seen in general we have seen yields under pressure. Yields declining a bit. However, or flattening a bit. That is something that kept supporting the equity markets. So overnight, treasuries actually erased any gains that we saw in Asia. So that's why the 10-year treasury yield, for example, is currently flat. The 2-year one is slightly higher, but this has kept the equity markets at the record highs territory that we have seen yesterday, along with the better than expected news from earnings, along with some good economic data from US on Wednesday and Thursday. So if I can check my calendar, we had a quite solid ADP number. We had ISM manufacturing beating expectations as well. We had seen ISM services also beating expectations, and that is another thing that supported, along with the goods and services, the initial job claims as well, supported them, the US economy, the US stocks, and etc. Now, what else? The data will be out right now. Okay, guys. So let me just share with you the calendar. Guys, any questions that you have, please stick it in the box, stick it below in the comment sector. I know you're asking about currency pairs. I'm gonna go back to them in a second just to see what is going on over here. So non-farm payrolls beating expectations quite aggressively. That's a brilliant reading, and I think that it could further boost US dollar. Let's see. So before I show you the dollar chart, okay, boosted. Let's see a bit what's going on. Payrolls up, hourly earnings also above expectations, weekly a bit lower but slightly lower. Unemployment, U6 unemployment below September's reading. Unemployment rate also slightly lower. So a very good, solid, strong report as it was expected. And also we have the Canadian labor data out. Also lower unemployment for actually a third month in a row, if I'm not mistaken. The hourly wages increase. Net change in unemployment positive as well. So brilliant, solid, robust reports from both Canadian economy and US economy. So let me just quickly shift to US dollar, because you need to see that. A big boost, and this is what it was pretty much expected, since we were expecting to beat expectations, but the fact that it beat it around 100,000 more than what was expected, that is something that could further support the US index and the US dollar in general, guys. So breaking 94.53. 94.53 was the high that we have seen back in October. So it has already broken it. Okay. The next immediate resistance level, is over here at the upper Bollinger, which is around 20 pips higher, 94.70. That's the very next immediate support level. If I zoom out a bit and use my, let me use my indicators to find, it will help me to find other further resistance levels. Perfect. Let me see something. So that was the so dollar holdings ground further extended, breaking the 94.50, which was October's highs, but also it was a key resistance area since last year. So to be more precise, key resistance area was at 94.50 up to 94.80, if I'm not mistaken. Let me confirm that. Yes. So next levels to be seen are 94.80. Let me zoom out so you can see 94.80 as the very next one to be the next immediate one, while the Fibonacci levels could help us with the medium-term analysis, providing next resistance area in the medium term. That implies daily and weekly, okay, even monthly. So 95.50, 95.80, etc. So let me zoom in though to see what's going on in the daily chart. Yeah, 94.80 is the very next resistance area for the asset. Based on the fact that this level was the 100% Fibonacci expansion coinciding with the 1 year's highs. So back in August 2020, to be more precise. Let's see the 1 hour chart and the 30 minutes chart. So guys, boosted, retesting actually for 4 hours in a row the upper Bollinger Band area. We could say that it might reach to an overbought territory, but that's not the case yet. Why is not the case yet? I will explain right now. Yes, Omar and Jiha, dollar strong. Yes, Julius, usually once dollar is up, is stronger. No, that implies that all the dollar correlated assets could be under pressure. So if I just quickly shift to gold, just for your own benefit. Come on. Oh, it was here in the very beginning. Yeah, that means a dip for dollar because we have an overall strong dollar. But be very careful with it, Julius. It is dollar related. It is quoted with dollars, right? It's gold against dollar, but don't forget that for the last 2 days, even though dollar was up, gold was also up, and that was because it's mainly affected by yields and not from the dollar strength. So if yields fall, gold goes up. Okay. If yields are cheaper, if bonds are cheaper, the non-yielding asset, which is gold, rallies. So you need to focus on yields for gold. But yes, we have seen a dip on the announcement. It quickly returned back up. Let's go back to dollar though, because we need to finish with it to see what's going on. So let me go to the 30-minute chart. We had that boost. It came quickly down. We need to, of course, wait for this candle to close. We always say with Stuart that you need to wait for the market to calm down to see to calm down, to interpret the data and etc. But the data, guys, were good. The data were solid. So once the market calmed down, the data should support the dollar. Okay, it was a good, solid report. So the only thing that it missed slightly expectations, it was the average hourly earnings, which just fall for 0.1 points. So nothing really. It's very, very small to worry about. Just wait for the markets to calm down a bit, for this noise to ease. And as I told you, the reason why I insist in the daily chart is because we need to see the overall picture. We had seen today a very good report from NFP. We have seen a solid report for ADP, a solid report from ISM services yesterday. We have a good earnings season from the US companies. We have seen Fed on the other side tapering as it was expected, tapering and even though they didn't make it clear when the rate hike could take place. However, the markets are already started viewing a rate hike beginning of June, and that's something that has supported the US dollar. Okay, and it's expected to support the US dollar in the long term. So, what is key for you to check tonight at the closure of the week? So, this is a weekly candle, guys. This is a weekly candle. What you should focus this Friday, so tonight and next Friday, is to check the weekly candles on whether the dollar will manage to come out above this 1 year resistance area. Because if something like that happens, this means that dollar, first of all, erasing more than 38% of the losses that we have seen in 2020. Okay, and that could bring in the long term into our attention the 96 and the 97 territory. I know this is long term. You might not be interested in the long term, but you need to be aware of the overall picture. You need to be aware in the overall picture. Even if you're scalpers, you need to be aware of the overall picture in order to go along with the trend. Trend is your friend, as we keep saying. You need to be on the side of the trend, and that's why it's good to be aware of the overall picture. So what we are saying is reversing 38%. We need to check tonight and next Friday as well. So another weekly candle to check whether it managed to break above, to move above 94.80 level. And just something that I just noticed. Okay, this looks to be like a double bottom. This is in the long term, guys. Okay, so think about it for weeks and months ahead. So, okay, so this is a double bottom. It looks a bit like a head and shoulders, but I'm not sure about it. It's not precise, so I cannot say it's a head and shoulder. But yeah, it's like a cap. It's like a rounding bottom over here being completed, and we need to see the confirmation over here with a move above 94.80. But you can see that the momentum in this long term also increases. Can you see? Shifts higher. MACD is finally positive and rising. That's the weekly chart. Daily chart. Let's see what's going over here. It has eased. has significantly eased in October, but starting slowly to rise in November. Let's go down to the 4-hour one. Keep pushing higher, increase of MACD higher, increase of RSI at 67, flatten a bit, but there is further steam to the upside, and anyway, it doesn't point lower yet. It doesn't do that. Let's go to the 1-hour chart. Fast moving average, by the way, still pointing higher. So let's go to the 1-hour chart. Fast time is rising, MACD rising, RSI rising. There is further steam to the upside to be covered. So intraday picture and medium-term picture look positive. Okay, that's it for dollar. Yeah, Oyibo, as I mentioned, yes, indeed, strong dollar implies to pressure on gold, but you need to keep an eye also on the yields. Okay, so let's see gold since you insist. So guys, are you covered with this with the dollar? You're okay. We have said the next key resistance area is going up to 94.70 and 94.80. Okay, if managed to break to move above that territory, then 95 and even 95.50. So 95 round number, right? 95 is the very next if the 94.80 breaks. Okay, and in the medium term, 95.50 also is in play if 94.80 breaks. Okay, so that was on dollar. Hopefully I covered dollar for sure. Let's shift to gold. Yeah, strong dollar implies to weakness from other crosses. Gold, for example, you saw a bit of a dip, retested the 200 period moving average. Let's see, however, what's going on. This is the 1-hour chart, guys. Okay, 1-hour chart. So let me zoom out a bit. So a bit of a dip. It was something that we have seen since the beginning of the day. So on the anticipation of the daytime, because we have seen the treasuries flatten, we have seen the gold also flattening. Okay, so because yields were firmer, equities were firmer, the rally stalled. Also, gold moved sideways since yesterday afternoon between 1790 and 1800s, but it has started reversing in the European Open. Ahead of the data, and now due to the positive NFP, we tested the 200. But guys, you mentioned you are asking where is bearish. I cannot really see something like that right now, because as you can see, I can see a lot of consolidation, to be honest. Because can you see, it's like a hummingbird. So it looks like a bird, isn't it? Looks like a bird, a hummingbird. Hummingbird usually is bearish formation, but for the time being, we don't have confirmation. So what I mean is that, let me get rid of this Fibonacci level because it's driving me crazy. Okay, close. As I was saying, and you see that the Bollingers narrow and flatten, stochastic clash, the fast moving average clash. This presents consolidation. So we need to be a bit patient, guys, in regards to gold, because for the moment, the indications are mixed. So Bollingers and fast moving averages, so my 5 and 9 exponential moving average are flat, suggesting consolidation between 1789 and 1800s, right? On the other side, MACD also eased a bit. You see that it started dropping below the signal line. RSI also drops. And my stochastic on the other side is presenting a bullish cross. So this is very, very mixed. This is very, very confusing. So what you have to do about gold is to be a bit patient. You can identify the support levels. So I'm going down. Okay, this is for intraday traders. Okay, now I'm referring to all of you guys that are intraday traders. Okay, guys, because you, Austin, if you are intraday trader, Madhu is asking about gold as well. Um, Michael is asking about gold as well. Julius is asking about gold as well. So for all of you guys that are asking about gold, and if you are, and all of you guys, all of you that are here, you are asking me about gold, intraday, the very short time frame, there is a lot of consolidation right now. Consolidation signals and mixed signals from the indicator. So what you have to do is identify key support and resistance levels, immediate support and resistance levels. So our immediate support support level is 1789. I have connected the lows of the last 2 days. Okay, the highs of the latest high is up to 1800s, right? So this is my resistance and this is my support. So if our 30 minutes candle or 1 hour candle managed to close in exactly 11 minutes below, outside this range, then we will have indication. If not, then we need to wait until we have an indication of either a break below the 1789 or even a break above the 1800s territory. This will be a sign on whether the gold is going outside this consolidation, this range, and it will be an indication whether it will fall or will rise. So be a bit patient about gold, okay? Put these support and resistance lines on and keep monitoring your chart. So we have 11 minutes to go until this candle closes. So let's wait and see. Theoretically, if dollar continues rising and yields continue falling, then the gold should sorry if then gold if dollar continues rising, then gold should go down. Okay, but it's the yields that more or less dominate the market, so keep an eye on the yields as well. So yeah, we can get back to gold in 10 minutes, okay, once the candle closes. Okay, are you okay with that? So let's shift to the other assets that you want me to cover. Aussie. Where's my Aussie? Let me check a bit the news, by the way, to see whether I missed something. Oh, something I didn't mention, guys, is that other than the good report that we had also a revised higher on the previous two reports. So revisions have added 235 positions to the previous two reports. Okay, so that's something that also adds to the positive result. So where is my Aussie? Okay, let's shift to Aussie. Where's my Aussie? Here it is. Okay, Aussie. That's a bit bizarre. It rose. Check. That's interesting. Uh, even though the results were good, Aussie has boosted higher as well. But anyway, we're just this candle hasn't closed, guys, and you see how that it has been to the downside since the beginning of November. Remains below the 20 period moving average, in a downwards trajectory. Negative bias prevails. MACD is negative. RSI is below 50. So this bounce, it could be selling the dip. Selling the peak idea. So this looks to be just a correction of this decline, long-term decline that we've seen since the end of October. So if I put the daily chart on, you can see that it's on the downside for 1, 2, 3, 4, 5, 6 days in a row. So the overall outlook for Aussie remains negative, with the next, with the support remaining at 0.7360, and the very next one at 0.7317 area. So overall picture for us in negative. Intraday picture, we have seen some boost, but remains in a downwards trajectory. So this looks to be like a limited bounce, like a small correction before another pullback, before further dip to the downside, because you can see that MACD is aggressively negative. RSI is below 50. It is pointing higher, guys, but it's below 50, so it's still negative. Stochastic has coincides with this boost, but it looks limited as well. So actually, yeah. So that's not something that you should worries you. This looks like a limited bounce, okay, correction on this long-term decline. So, and anyway, the data were good. So after the noise is done, we might see Aussie continuing to the downside. Hopefully I covered you. If not, please continue adding comments. Let me know what you want me to, let me know what you're struggling with. Thoughts on NASDAQ during NFP? Sorry if I missed that. But anyway, NASDAQ is positive. Equity markets are positive. They were just stalled ahead of the release, but they are overall positive. What can I say? So you see, the long-term picture is just rising and rising and rising to new record highs. Bias is positive. So you asked me about during the NFP, what you were expecting during the NFP, but okay, even at the time of the, if I, let's say that, let's assume that I really okay, even in the NFP, okay, even if you want to trade the data, which is something that you should be very careful. And you, so I guess if you want to trade the NFP, I guess you are intraday trader like NSBY. So the 30 minutes chart was looking like that, right? So before the NFP, the NASDAQ was here, right? It was here, right here. But you could see that there is an upwards trajectory, well supported by the 50 period moving average over here. So that was that you could use this one as your immediate support level, or the Bollingers, just to avoid the noise of the release. This could have been your support areas, but yeah, it was an overall positive. We had a bit of a pullback just 2 hours ago, but it was kept above the 20 period moving average, well above the 51, which is well supporting the asset for 2 days in a row. So yeah, based on the expectation that we were expecting a solid report, then your view before the NFP should have been for a more further appreciation of the NASDAQ. But NASDAQ is a stock mainly affected by the earnings season right now, and the uh, and the central banks, but mainly from the earnings So yeah, it was overall positive. I'm not sure why you are interested so much about NASDAQ during the NFP. It wouldn't matter. It couldn't reverse the overall picture of the Nasdaq. Like it didn't affected the stocks either. On the previous release back in okay, of course it will support further Nasdaq today. Now that we have solid NFP, will boost further the equities and as a consequence Nasdaq. Yeah, but yeah, guys, equities right now are in a very, very good mood. They keep rising to record highs. In the long term, this is expected to continue. We might see a bit of a sell-off on the year's end because the institutional players at the end of the year close in position in order to take new position with the new year. So that's why we seeing a bit of a sell-off at the end of each year, the January effect as we call it. But overall, until then, Nasdaq and S&P kept supporting by Fed, kept supporting by earnings. Tech companies are doing great. Some of them are reporting record sales. So yeah, all good. So next resistance area for Nasdaq is other than the 16,525 that I have identified using my Fibonacci expansion is the edge of my Bollinger, which is at 16,740. Okay, senpai. Um, okay, further questions. Swiss. Let's shift to Swiss. Dollar Swiss. Okay, dollar Swiss. Excellent. Boosted further, it was due to the strength of the dollar. So Swiss got weaker against dollar, right? Dollar Swiss. So Swiss is the quoted currency. Weak Swiss against a very strong dollar so far. Keep extending higher. It looks a bit overbought intraday in the short term, my dear Michael. Okay, it looks a bit overbought because it's for 1, 2, 3, 4 hours in a row outside the Bollingers. So it looks a bit overbought. So at this point, let me put my intraday template. Yes, here we are. This point, we might see a bit of a consolidation or a small pullback as a correction before another boost to the upside because it reached overbought territory. You can see that RSI in the short term flattened and actually it's overbought already. So we might see a bit of a correction. The same stands for stochastic. It reached overbought and started slowing down. So yeah, there is the need of correction. There is the need of a correction either as a pullback, either as a consolidation. So yeah, we might see consolidation right now or a bit of a pullback. Take care of that. Let's see the 30-minute chart. Consolidation actually already started if I check the 30 minutes chart. So dip to 91.51, rebounded on the data, fast MAs keep rising, RSI flatten, stochastic are pointing lower, so we might see further consolidation or further pullback, again a retest of 91.71 level in the next few hours. So intraday is a bit of a neutral outlook because it was overbought, so it needs to correct. While in the overall picture, in the overall picture, we still see a bit of a consolidation as well. Why? Because the asset was in 2 months decline, but it has well supported the last 4 days, currently retesting the 200-day moving average. So we cannot really say that we have neither negative, neither nor positive outlook, overall outlook for dollar Swiss, because on the one side we have a rebound, on the other side remains below the 220-day moving average. So if the asset manage today or within the next week to move above the 220 moving average, so to extend gains above 91.90 territory, then outlook could change from neutral to positive. If not, if it fails to break this resistance, okay, the distance between the 220-day moving average, so 91.70 to 91.90 territory, if it fails to move above it and starting slowing down again, turning lower again, then we could say that the negative outlook resumes and further decline could be seen. So very neutral outlook for Swiss, my dear Michael, in the daily chart and in the intraday chart as well. So yeah, you see we have a long tail candle. So finally the hourly candle, candle has closed. It closed positively, but with a long tail to the downside. So bears are like pressuring the dollar Swiss. So yeah, we might see a bit of a consolidation within these two barriers, 91.73 and 91.50, for the next few hours. So quite neutral. Okay. 30 minutes, yes, bouncing. Let's wait and see. Anyway, something that could trigger your attention or something you should focus on is to see whether it will get out of this range and it could either extend further to the upside, breaking the 91.70, or whether it will come down below 91.50. However, if we have a strong dollar, if the dollar continues strengthening, then dollar Swiss should go higher. New Zealand CAD. So Canadian dollar, let's start with with dollar CAD, okay, and then we'll move to New Zealand CAD, dear Madhu. Michael was it. So we had good economic data from Canada as well. So on the news, we have seen Canadian dollar benefiting against dollar, and that was because even though dollar also is strong, Canadian dollar is also strong because we had a good labor data from Canada as well, along with a stable so far oil. So dollar CAD slipped lower with Bollingers expanding. We have a bearish cross of the fast moving average over here. Can you see that? And you see this, guys? Bearish cross of the fast moving average, bearish. Lower Bollingers in this 1 hour chart expanding lower. RSI slips below 41. Let me put also my MACD. Where is it? Oops, sorry. Come on. Okay, yeah, here we are. So bearish cross of fast moving averages expansion of Bollinger's lower, MACD turn negative, stochastic turning lower, RSI also lower. So the indications are for further pressure on dollar CAD for the time being. If I go back to the 30 minutes chart, you can see that it's 1, 2, 3, 4 sessions in a row to the downside. The legs are quite strong to the downside, so it seems that there is further steam to the downside for dollar CAD. Yeah, so overall outlook, meanwhile, we have a rebound, but overall outlook is it looks neutral, guys. Okay, the long-term one, because it's stuck. It's actually, we have seen past the Bollinger's flatten, RSI flatten. So let me just. So yeah, flat RSI, MACD is a bit, but it remains flat. Bollinger's flatten. So dollar CAD overall neutral. Intraday remains downwards. Found some ground right now, but it's not really significant so far. We need to, let's see a bit. Okay. Okay, actually I'm mistaken. Let me see something. So down, and these legs are a bit higher. Okay, guys, okay, my mistake. Intraday outlook, intraday, the 30-minute chart, 1 minute chart, indeed they seem negative, but I'm afraid that this decline has already found its end. Interesting. So, okay, take care of it. Take care of it, because this looks to have already run out of steam, and on the aftermath of a good NFP, we might see the dollar CAD going up again. So be careful, because this decline might already reach to its end. Okay, so only a break of this floor, 94.40, okay, to be precise, 94.40, okay, could extend declines down to 124.20 level. But for the time being, it's really a bit, it's like it looks like it has found its floor over here. So this decline might have reached to its end already. Okay, so be careful about CAD. Okay, you see that's because oil has also flattened as well. So that's what is causing this limited moves in dollar CAD. It's also the oil. But nonetheless, okay, something that I want you to put on your charts are two levels. And these levels are the day's highs, okay, 94.80, and the 93.90 territory, okay, 94.80 for the day traders, 94 for tonight's closure, 94.80 and 93.90. What I'm saying, 124.80 as the resistance, 123.90 as support. These are two lines that you should have on your charts in order tonight, at the end of the session, at the end of the week, you will get back to the dollar CAD and see where the weekly candle close, whether it broken above 124.80 or whether it remains below it because a brave go 124.80 could open the doors to 125, 126 territory, while a failure to break that level could suggest that this bounce that we have seen since the end of October, it might run out of steam and we might see the asset moving down again. So take care, put this line on and monitor tonight or Monday morning your dollar CAD. Yes. So anyway, in the long term, the dollar CAD is expected to go down in the long term, in the next few months. Because the oil is expected to be well supported by the fundamental reasons, by the supply constraint, the production issues, the production bottlenecks, the OPEC plus, and etc. So in the long term, but I know that you might not be interested in the long term. So have these three lines, as I told you, intraday, the 124.40 for scalpers, and for the rest, for everyone actually, have on your charts the 124.80 and 123.90. I want you all to have these three lines on. These three lines are the immediate support and resistance levels. Okay? Thank you. There is nothing specific, my dear Peggy, where you should focus on. This week was a very volatile week, so there were opportunities all over the place, in stocks, in indices, in currency pairs, in commodities. There was a lot of volatility today, so I don't want to mention specific currency pairs. But if you see consolidation on a currency pair, maybe you want to avoid it. But yeah, this depends. So wait, I missed dollar CAD, Kiwi CAD. So let's shift to Kiwi CAD. So Kiwi CAD, perfect. Kiwi CAD. Bearish outlook prevails, my dear Michael. Okay, lacks a bit of volatility. You can see that there are like small body candles, but failing to move above its 10 period moving average in this 1 hour chart, fails to move above its 20 period moving average, MACD negative, stochastic flattened to negative, RSI below 50. So it seems that dollar CAD has further steam to the downside. So next immediate support, it will be this latest low at 0.8816. So a move below that could open the doors further to the downside, potentially to this low that we have seen back in the beginning of November. While only break above the 20 period moving average could bring into our attention the 8850 or even this latest high at 0.8867. Okay, but yeah, you see Bollingers are pointing lower, right? Fast MAs, yeah, price action is anyway below all moving averages. It's been to the downside since Monday. So a negative outlook intraday for Kiwi CAD. Now in the daily picture, we can see neutral. We're seeing like a rounding bottom, a top to be formed, not confirmed yet, but to be formed. So for long, medium-term traders, this looks to be a rounding top that hasn't finished yet. It will finish once the asset comes down and breaks the neckline. The neckline is seated at 0.88 level, 87.98 more precisely. So a move below that level, below this floor that was retested twice, below this neckline, could confirm a rounding top, which is a bearish pattern, and it could open the doors back down to this low with immediate support at the latest fractal 0.8726. Okay? Keep an eye on it for next week, dear Michael. We reply, are yields high or low? Where do we find yields data? Okay, the yield data are anyway online, but we have bonds. With bonds, you can understand. So we have the three major bonds, dear Hanifa. Gilt, which helps you identify sterlings, pounds performance. We have EU bond, helps you with the euro, and we have US 10-year bond, helps you with the dollar. This is bond, okay? The bond is it's is negatively correlated with yields. Okay, so if yields are down, bond is up. If bond is up, then dollar is also up. So since we have seen, you see that? We have seen, let me zoom in. We have seen 10-year US bond, so the US 10-year bond, government bond, going up since the 22 of October. Yes, 22 of October. If I go up to the dollar index, the daily chart, then I should have seen pretty much the same response. Let's see. It has rebounded, but not on, since the 22. It had a strong bounce on the 29th. So consolidation a bit since 22 of October, and then a bounce. So pretty much similar performance. So if in your charts the government bond of a country, either United States or gilt, which is for pound from UK, or band for euro, goes up, then the currencies of that country should also appreciate. Okay? Because that implies that yields are down. Okay? But if you want to find the yields, I think they are online. I don't know which site, maybe Finvi, where you can find live charts of yields. I'm not sure whether you can see them in the. Actually, that you can find them in the CNBC. If you Google yields live chart, I'm sure it will be on the CNBC, and it should also be in the Market Watch, if I'm not mistaken. But you don't necessarily need it. Just keep an eye on these three bonds that we offer, which are for US, the UK one, and the bond. So UK, for example, this is the gilt. It boosted higher, right? You see, boom, up on due to the Bank of England, right? So actually all the yields of the bonds have appreciated due to the Bank of England yesterday. So they were all on bid since Bank of England yesterday. You can see that it's boosted. Okay, but because if we compare the US 10-year one with the Europe one, there is by comparing these three, you can understand how the euro dollar might go, where the euro dollar might go, where the cable might go. So you can say to me, but Andrea, you said that if the bonds are going up, then the currency will go up as well. But no, yes, that's true. But guys, over here, we're not trading sterling, right? We're not trading pound. We're trading pound against dollar, okay? And if we compare these two, the yield and the 10-year one, the differential between these two is on the favor of dollar. That's why pound could continue extending lower, because on the one side could continue moving lower because the difference between these two are on the favor of US. So US economy is doing better than the UK economy. Okay, so that's why cable can continue moving lower. Okay, yeah. So that's why we see yesterday a big pressure on pound. First of all, because the Bank of England disappointed the markets, and the markets have had packed up the hawkish Bank of England. Okay, that's pressure. They didn't. They wrong-footed the markets. We were expecting a hike, or at least to mention hike rates, but they didn't do anything. So they were less hawkish than what was expected. So that's why they wrong-footed the markets. That's why we've seen the pound moving lower, the cable moving lower, the pound being under pressure. Okay, because all that anticipation about rising rates and etc. already priced in, and it could keep rising pricing in, but yeah, they disappointed the market. That's why we see cable moving lower. But nonetheless, let's move on with your questions. Okay, you keep asking about yields. I might have confused you. You don't necessarily need to check on yields, but it will be good to know the yields differentials. So if you Google, guys, yields differentials, okay, in the I think it's in the bar chart. Chart. If you Google yield differentials or yield yield differentials, you can find live charts which are plotting the yield difference between the US yields with the UK yields, or the US yields with the Euro yields. By checking whether the difference between those two, the spread between those two, is getting wider or narrower, you can understand whether the euro dollar could move down or up in the long term, or whether the cable will move down or up. For the moment, globally, the US yields, the yield differential are on the favor of US economy. US economy has seen a nice recovery more than all the other major economies. That's why we might see cable keep moving lower. We might see euro also keep moving lower. We might see to dollar yen also in the long term continue moving higher, because the differential between the Japanese economy and the US economy, the yield differential between these two countries is narrow, is big, it's getting wider, and it's on the favor of US economy. That's why in the long term, US dollar is expected to continue of the ongoing positive data. We can see this in the short term as well. Okay, you can say, but Andrea, here in dollar yen, can see moving sideways. That's fine, because it was a volatile week, but nonetheless, the dollar yen has seen a good spike since the September, hold support above the 113 territory. So that looks to be just a correction before another boost to the upside. Okay, because if I put the daily chart, the daily time frames, okay, you can see that consolidated a bit because it was over bought, but it kept the gains that we have seen of the whole year. You see, it kept to 2018 highs, and it remains positive. MACD is positive, RSI is positive, volume parabolics are pointing higher. It's moving above all its moving averages. So in general, this look to be just consolidation, correction of this overbought condition. So even if it detects again, it could find support over here at 113 level. Okay, so the 113 or even 113.20, which is last week's bottom. So this will be a key support level in the long term for dollar yen before another bounce to the upside, because nothing has changed in the long term for if we compare Japanese economy with the US economy. Japanese economy remains weaker than US economy. So that's why in the long term, dollar yen might continue moving higher because of a weak yen and a strong dollar. Intraday now, because I know you're interested in intraday, we had a lot of risk. It's a risk sensitive asset. That's why, because of NFP, we have seen the market shifting to the safety of dollar yen, and that's why yen moved down. So we have a strong, we have a strong yen after the NFP. While, oops, wait, something's going on right now. Let me see the news. Something might happen. Why dollar started moving lower? Let me see. Solid report. What's going on? There is an announcement. Let me check, guys. Is this kind of a profit taking condition or something happened? Can't really see something. That's a good opportunity to say that always have your stop loss nearby. But why is down? Cannot see anything new. Not sure whether there was an announcement from an official, a comment from an official that like revert the gains of dollar. But guys, once this is done, as I said, the data were solid, so we might see the asset keep moving higher. Not sure what's going on right now. Maybe just some profit taking or a comment from someone, which I haven't seen anything yet. I cannot spot it, but have in mind that overall remains to the upside. You can see how bullish this hourly chart is. So as long as it doesn't move below here it is, the 94.30 territory, right? So here, then the outlook doesn't change. This might be even an opportunity to bind the dip, as we call it. Okay, so don't be afraid. It is what it is. So that's why we use our stop losses. That's why we always have targets and stop losses, not tight stop losses, in order to remain in the market if something like that happens. So if you had wisely used the 20 period moving average as your stop loss, you are still on the market. So it's not a big deal that it has pulled back some gains. But I need to find out why is that. What happened? What have I missed? Thank you, Vicky. We have seen euro dollar. What on euro dollar? What did we? Further dip on the NFP. A bit of a rebound now because I don't know what's going on. Whether there is something from officials that has weighed on the. Oh, here it is. It was Mr. George, Fed's George, saying that okay, he's a voter next year. Said that a number of indicators point to a tight labor market. Tightness in the labor market could prove temporary. Um, he didn't mention anything. Uncertainty on how long inflation and jobs market friction will last. Okay, his comments might have weighed a bit on the dollar just now, but it is what it is, guys. The outlook, the overall outlook is still on the favor of dollars. So this looks to be just selling the peak condition in this euro dollar over here because euro dollar on the announcement actually dipped uh, um, to the lowest level since July last year, if I'm not mistaken. Yes, it hit it there. You see, on the announcement, it went back to July last year. So it posted the low at 115.12. So overall negative picture for euro dollar. It is expected to keep moving lower. You can see that it keep expanding lower. MACD keeps rising lower. Parabolics are above the price. All indicate for further dip, for further decline of euro dollar, with the next support coming at around 115 level or even lower. I need to put the weekly chart in order to find a useful support level for you guys. So 115 is the next one, round number. The very next one is 115.40. And the very next one is on that support that we have seen back in May, which is 111.70. So you can see that it was anyway. You could see this head and shoulder broken. So that's nothing new. It's not something new that euro dollar is in a negative outlook. Okay. So yeah, long term, medium term remains negative with eyes on 115. If that breaks, then there are open doors for 114, 113, 112, and even 111 area. Intraday now found some support, but that looks limited. It's still well below all its moving averages. Parabolics are remain above the price, indicating two continuation of decline. RSI is below 50, again an indication that this looks to be a limited bounce. So yeah, don't be afraid. 5 minute chart, dear Klebley. 5 minutes is 5 minutes. I cannot do analysis of 5 minutes. What I can see on a 5 minute chart. Oh god. 5 minutes. Okay, 5 minutes, 5 minutes. Let's see 5 minutes. So continues sloping lower. There was a bullish cross early, a bullish candle earlier. This is a 5 minute chart, but you see that it's keep doing posting lower highs. So what I can say, my dear X-Leplay, is keep moving lower. MACD is negative, stochastic the same, RSI the same. Fast MAs have flattened a bit, suggesting they may consolidate, but they are still under pressure. So negative bias it is, with the next immediate support level at 112.2440 or 124.40. Yeah, 124.40. So as long as the uh, As long as it doesn't move above this trend line that I have just put, then any bounce looks to be just a selling the peak condition. So as long as it remains below this trend line that I have just put, we've seen cable. So cable is the overall negative, found some appreciation the last hour, but remains below the 20 period moving average and below the highs of the day. Negative bias remains. Okay, here we are. Remains below the 20 period moving average in this 1 hour chart, below all the moving average. Parabolically is above the price, something that indicates bearish indication. MACD is negative. RSI slightly appreciated above 30, but remains well below 50 and is unlikely to, as long as it doesn't move above 50, we cannot really see a bullish sign anywhere. So overall negative outlook intraday and in the long term as well. So yeah, key support is this one, is the September lows. So the same stands for intraday picture as well, my dear Christian. So that looks to be a limited bounce. Limited bounce. Team. Okay, briefly. JB, briefly. The solid, strong payrolls from US imply to a healthy or recovering of labor data, of employment data in the United States, something that could help further the US dollar. We have seen gold. No, we said that we should check the candle, right? So broken 1800s, that's good. Broken 1800s implying to appreciation of gold. Fast emails over here. Let's see to the I should below it. Oh. Okay, there are some so it broken the barrier and is returning below it. So this brings to the attention the retest in few minutes of the mid of this range, guys, 1795. Yeah, but the RSI is still negative, points lower. MACD is down as well. Stochastic is limited. So despite this bounce, all the indicators agree to a bearish bias. It seems that bears are trying to gain the control. Okay, it seems that bears are trying to gain the control. Despite this boost, the indications are presenting the vice versa scenario, that it will come down again. Interesting. Interesting. Impulsively ginger. I agree, Edward. I agree with you. However, if we think about the fundamentals, okay, because it's a Friday, it's the end of the week as well. So if we think about the fundamentals, the um, the the goal could eventually could eventually recover back to the 1750 territory if we think about the continuation of dollar higher on the aftermath of a solid employment um, um, of a solid employment in general, solid economic data. Um, yeah, so it already has posted two lower highs in October. So another lower high could imply to an easing of gold in the next few days. Okay, so if we think about the fundamentals are not really supporting gold. Okay, now intraday we have seen a boost, not supported by the technical indicators, so there are still noise in the market, but that's why you need to be a bit patient on gold. Okay, remain a bit patient to have a confirmation on whether it will get back and stack within this range or whether it will continue appreciated. If this candle comes back within the range, that means that was due to the noise of the market, and it will continue bouncing between these two levels, the 1800 and the 1790. Okay, guys, let's finish with dollar yen because before I call it a date. I'm a bit tired. Where's my dollar yen? Here we are. So the yen actually appreciated. The yen got a bit of a boost during the NFP release because of the safety of risk. But you can see that if it found a floor once again, so it didn't manage to extend losses below the 113.50 level. So if we consider over here, you see, found support. If we consider that, sorry guys, so let's start with the 30 minutes. If we consider that, that MACD has eased. It reached to zero, even though the signal line remains below zero. But MACD histograms are very, very close to zero. If we will consider that RSI is pointing lower along with the stochastic, all these means that there are still some bears in the market pushing the price higher, but limited. What I mean, we might see in this 30 minutes chart, right? The next few sessions, okay, in the very next few sessions, further pressure, but this is limited. So that's why you need to wait a bit, okay? Sorry. So if I focus on the 30 minute chart, okay, that was before the data and that was during the data. So we have this huge boost. This candle will close in 14 minutes. If it managed to come up above if it comes up above the 113.73, okay, then this means that the dollar again is likely to continue moving higher and get back to 114 level. But if it fails to move above here and remains at the low territory of the dollar yen, or even more precisely, eventually to come down below 113.50, then the next level that for you to watch, it will be the 113.23 or even 113 territory. But yeah, so keep an eye on 113.73, okay, 113.73. If that breaks, then next level to be watched will be the 114. While if the asset fails to break this level and remains below it, then this indicates that we could either continue see the asset bouncing between these levels or even to extend bearish bias. But for the time being, it looks directionless. Okay. Guys, I run out of steam. I'm a bit tired. As I mentioned, dollar yen is steady. Is expected to continue moving positive in the months ahead due to the yields differentials. A key floor will be the 113.23 territory and the 113 territory in the medium term. While intraday is bouncing for the moment. So between the 113.73 and 113.50 levels. So keep an eye on those levels. That was it for me. Any questions that you have, please let me know right now. Otherwise, I will call it a date. We don't have any other important news coming out anytime soon, other than the oil positions and the gold net positions from the CFTC. So yeah, this is it from all the major from all the countries, from US, from UK, from Japan and Euro. We're gonna have the oil. Actually, we have the net positions for all the majors, from gold, oil, S&P 500, pound, yen. But these are minor significance events, so it's unlikely to affect the market. What you should understand is that we have an overall strong US indices. So S&P right here, open higher, NASDAQ open higher. Someone has asked me about NASDAQ open higher, S&P also open higher, Dow Jones also open higher. So in general, the major US indices, the equity markets are moving higher. While on the flip side, we have the yen for the moment a bit lower, but remain on the key area that I told you should watch. This 93.15 and 94.80 level remains on that, with data supporting further boost for US dollar. While on the other side, we might see we might see the continuation of the dollar appreciation after the today's events, the today's releases. So that was it from me, guys. Thank you for attending. Once I don't understand what you're talking about, sorry, I don't speak this language. Thank you very much for attending. Hope you are having a great day ahead. I need to call the date, and take care. I'll see you again on Monday again. Thank you, bye, guys. Thank you.